The markets rallied hard last week after the Fed and the BSP came out more dovish during their rate announcements. Will the market win streak continue? Let's discuss. My name is Dead Slim. Welcome to another episode of Monday Market Out. So let's do a quick summary of our economic indicators. GDP growth last third quarter was at 5.9% and we are projected to end the year at around 5.5% GDP. Peso-dollar exchange rate remains stable at around 55.69 or 55.72. We have inflation tamed at 4.1%, but we are projected to end the year at around 5.8%, I think. We have our unemployment rate steady at 4.2%, and we have PMI numbers 52.7, which means that our manufacturing sector is still expanding. Car sales are up 9.5% as of September. But I wanted to highlight tourist arrivals. We have 3.63 million as of August of 2023. But in a recent announcement by the Department of Tourism, we've currently surpassed our visitor target of 5 million for 2023. And with a couple of weeks to go, we should be able to see numbers continue to improve. Now, our target tourist arrivals for 2024 is at 7.7 million. So hopefully, we could do better and reach pre-pandemic levels at 8.3 million. This should give our airline and gaming industry stocks some boost for 2024. Now, last Thursday, the SEC also came out with a circular proposing some significant amendments to various rules in the exchange, specifically on backdoor listing or voluntary delisting rules, as well as some guidelines for fairness, opinions, and valuations. And they have invited the investing public and market participants to chime in on these proposed changes. So, of course, the mandate here really is to make the markets more fair for companies and also the investing public. Because if you look at the past 10 years, we have been lagging against our Asian neighbors in terms of companies going public. In other news, the normally apolitical C family came out with a surprise statement of their own with regards to PH-China relations. Now, this just underscores the business exposure some Philippine companies have to China, especially SM. In a conflict between two superpowers, a small country like ours can't exactly take sides. And, China is too close to us geographically, really to antagonize. So a more diplomatic approach would be ideal. Now, but I guess it helped the SM stock last week as we saw SM break out of this resistance here to gain 9% in the last 2 days. So the highlight last week was the decision by both the BSP and the Fed for a rate pause. The BSP kept rates unchanged at 6.5%, but cited some inflation risk moving forward. For one, we need to be mindful of the El Nino phenomenon. Note that for this year, we've only had 10 storms compared to a yearly average of 20 storms. So a potential rice shortage could be on the horizon if the government is not able to fast-track projects to alleviate the effects of El Nino. Also, geographical conflicts can still affect gas prices next year. We are nearing a support zone for U.S. oil, and we could still see oil prices coil within the 74 and 67 range. But despite the risk, the BSP demonstrated a more dovish tone this time around, comparing statements from the previous meeting to last week's announcement, where they said, before they said that they were prepared to resume monetary policy tightening as necessary. But this time around, they said they were ready to adjust monetary policy settings as necessary, which gives them room to either adjust upwards or downwards, right? So also they said before that they wanted to keep monetary policy settings tight until a sustained downtrend becomes fully evident. But now it seems that they've seen evidence of this downtrend and they are allowing inflation expectations to settle more firmly within the target range. This all happened after all the euphoria the previous day when the FOMC, the Fed, announced that not only are they done with rate hikes, but they have penciled in not one, not two, but three rate cuts for next year. So while the rate pause was not a surprise, the rate cut announcement definitely was. This sent shockwaves across the market. Let's take a look at market reactions across different charts. Of course, the US government 2-year yields going down 40 basis points to 4.38%. The 10-year yield fell 30 points to fall below 4%. We also saw the dollar index broke the 102 support, and US oil bounced back in anticipation of a soft landing as the market projected demand to at least remain steady or even go up a bit, as we are likely to avoid a recession. And of course, the US market, S&P 500, Dow Jones, and the Nasdaq leading the way, reaching new highs for 2023 after the announcement. Now, looking at the probabilities, the market is now pricing in a 63% chance of a rate cut this March, followed by another one in May and another one in June. And with 4 more possible rate cuts being priced in. Note that last September here, we were still seeing some probabilities for rate high, represented by this blue bar here. But the latest projections have dramatically changed. The market even pricing in 1, 2, 3, 4, 5, 6, 7 rate cuts by next year. Now let's take a look at the charts. The PSEI played our ideal scenario last week as we were expecting the index to retrace back to 6,200 in order to gain momentum for a springboard rally to test 6,375. But the PSEI did more than that as it rode on the back of US euphoria to even break out of this strong resistance to close the week at 6,478. So which of our stock picks led the rally last week? We have the conglomerates here, AC and SM and A REIT leading the way. And if we look at the 1-month chart, as expected, we are seeing a bit of a rotation. We have Ali here and SMPH here. But look at the laggards here. We have BDO, BPI, and Metrobank. So we are starting to see banking stocks lagging behind. And it will be a quiet week for the PH markets in terms of economic indicators. At this point, we may be nearing some oversold levels. So we will need to either consolidate here or retest 6,375 to confirm this support zone. So if the index touches 6,375, it may be a good time for those who missed out on this rally to start easing in. Now, for the S&P 500, remember we mentioned last week about the craziness of the options market. We mentioned here the lack of a call wall, which could mean the markets could even push up to this zone. We have 480 and 502, and with a put wall here at 450. But as of last Friday, the triple witching options expirations kicked into full swing as we saw options increasing to 5.9 million options expiry on that day. And look at this, a call wall forming at the 474 level. And usually, the markets will tend to gravitate towards this gap here 68% of the time. So if we go back to the S&P 500, this is exactly where we ended. Turns out, the market did go crazy, breaching 4,620 and tapped the options call wall here at 474 before settling at 472. Now, if we look at the weekly charts, this is a very aggressive move, the likes that we've never seen before, I think, because the last time I saw a sustained rally like this was probably back in 2018 here. Right? But no, it's just small candles. And what happened here when it had 4 big candles here, look at where the market ended after that. Right? So parabolic moves like this does tend to extend further than expected. So we may not actually be far off from hitting 4,800 for the rest of the year. Back to the daily charts, the same situation here for the US markets. We are at oversold levels actually. And a consolidation at these levels could give the markets the momentum to continue this upward trend towards 4,800. Now, price action here still does not show any indications of slowing down. So we have to assume that pullbacks will eventually be met with buy demand. Looking at next week's economic calendar, we will get more data on the US housing markets as well as the latest GDP numbers, which could further confirm the chances of a soft landing. Later in the week, the PCE numbers hopefully comes out also with no surprises. So that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And as usual, good luck with your trades. Please manage your risks accordingly. And I'll see you again next week.